It is such a wonderful opportunity that we have to come again to share with you. It's our desire that we want great accountants. We want excellent accountants. And that is why we refer to you as kings and queens in our accounting class. Ladies and gentlemen, today we're going to be looking at bank reconciliation. Bank reconciliation. Another of the concept that is critical to the function of the business, the bank reconciliation. Yes? We, again, our objectives, we want to be able to explain to you, yes, so that you are clear, why is it necessary to have reconciliation, and two, to define some very important concepts, yes, some very key concepts that will be manifesting itself on themselves rather in the preparation of bank reconciliation. As well, we want to show you the technique, yes, in working out as to interpret and to find the items that are required to reconcile the bank, yes, and our cash book. Of course, we're going to be also seeking to do a simple example so that you can begin to see its application and making the whole thing real to you. All right, ladies and gentlemen, so let's begin. Explain why reconciliation. Why is it that reconciliation, bank reconciliation, is necessary? And here is what happens. Yes, well, when we talk about reconciliation, that first we have to deal with that concept. The word reconciliation comes from the word to reconcile. And reconcile means to bring back into agreement, yes? Bringing parties into agreement. So, for example, a couple that has a conflict, yes? And both have disagreement and they had a fuss or something. After a while, they find some way to come together, a midpoint. They really have come to what? Reconcile, yes? Or a boy and two boys having fun and some mishap taken place and they become hostile to each other, but the next day they have allowed that to pass and they're able to relate again. That means they have reconciled. All right, so the reconciliation takes place between the bank account, our bank account, so the bank, yes, and I'm saying bank now as being the institution. Yes, the bank and our business, which has the cash book. No, oh, I beg your pardon. They're not having a quarrel, okay? There's not a quarrel between the bank as an institution or our business. What really happens is that the figures as displayed in the bank statement does not agree with what may be in the cash book. And there are a number of reasons that can cause this discrepancy to take place, where the balance at the bank is not the same as the balance in the bank account in the cash book. Okay, that there is some discrepancy taking place. Yes, and we're going to discuss that in a while. So why are we reconciling it? Because we want to make sure that whatever is taking place with our account at the bank is the same thing that is taking place in our cash book in the bank account in our cash book. All right, so that is why it is critical for the reconciliation. We want to be clear, or the business want to be clear, what really is their bank balance. how much money do we really have at the bank? And the question is, why is it that the business want to know? Because whenever it's going to now take any action, yes, to pursue any payment to their creditors, they must know that the figure that they have in their cash book is the same figure the bank has. Yes? So that when they write the check, they will not have a problem. Yes? And the check becomes, we would call bunks or dishonored or rejected by the bank. And so that's why it is critical. Yeah, it's critical. It will cost the business. If the transaction, if it goes over into what we call bank overdraft, then the business will have to pay the bank additional money because it's a short-term loan and interest is charged on the bank overdraft. So you'll have to pay out more money. So these are the, as I say aforementioned, are some of the reasons why it is so critical that the bank reconciliation statement is done. All right? All right, so that we have cleared that matter, let's deal with some concepts here in terms of bank reconciliation. Bank reconciliation concept here we want to look at is bank charges. Bank charges. What is bank charges? It's really the bank is providing a service to us. It is maintaining our account. So it is a cost that they are charging us for maintaining our account. Yes? So it's a cost, yes, that the bank is charging us for maintaining our account or for providing the service and the safekeeping of our funds. So that's why it is referred to as bank charges. Yes? It's a charge that the bank is putting on us for maintaining or keeping or maintaining our accounts. The second one has to do with standing order. Now, what is standing order? A key idea out of this is order. An order is really an instruction. An instruction. And it is the instruction is standing, means it is for a period of time. Yes? The order instruction is for a period of time. So let's now break it down. Standing order is where our business, yes, gives an instruction to our bank to make regular payments on our behalf to our creditors or suppliers. Let me go again. Standing order is where we, the business, have given instruction to the bank to make regular payments, yes, on our behalf to our creditors or suppliers. All right? For example, we have to, our business is insured. We take out an insurance on our business. And therefore, the insurance installment or premium must be paid, let us say, every month or every year. So we may, instead of remembering to write that check and send it off to the insurance company, we give the instruction to the bank to make that payment to the insurance company, pulling the money from our accounts to pay the insurance company. Or for those who are renting a business, a building, right? We rent the building and we have to pay the rent every month. Instead of finding the money from pocket to pay to the landlord, we ask the bank to say, all right, on the 30th of each month rather, or the 25th of each month, we're asking you to pay my landlord XY amount, right? And so that's a standing order. Standing order is something that the bank is going to do automatically. Yes? When that time comes, the money is just been pulled from the account, and when it is being pulled, so sometimes the business would not be over time. Don't remember about those things. Yes, right? So the money is being moved out of our account. Yes, because we have given the instruction to the bank. That is standing order. All right, we're going to move to the next one. Next is called credit transfer. So what is credit transfer? And today, in our 21st century, we are doing much of that now. Money is moving from bank to bank without us handling the monies, right? So credit transfer is where the bank money is transferred from one bank to another, right? Right? Credit transfer, we're moving money from one account to another account. Let us say, for argument's sake, that our customer owes us some money. Yes? Customer owes us some money and they are going to be paying us, and they're using it, doing it via credit transfer. The customer, yes, the customer's bank is going to be crediting, right? So money moving from the credit side of the customer's account, and it is going to be coming to the credit side of our account. That sounds a little bit rigmaroleish. Let me just put it here so you can follow. All right. So this is the customer. I'm using C, yes, C for the customer, and I'm using the customer's bank, and I'm going to use B for our bank, business bank. So I'm putting some application to the idea of credit transfer. Now at the bank, this is where the customer's money is, on the credit side. So the customer is taking money from the credit side of their account, and they're going to be sending it to our bank. So to take it out, they're going to have to debit it, and then it's going to come to the credit of our bank. So the money is moving from the credit of one bank to the credit of the other bank. Okay? Credit transfer. Nice. I hope that you have gotten that. Let's go to the next. I need to erase. Yes? Or not. Let's go to the next concept. Next concept is referred to as dishonored check. Now, what is dishonored check? This is a D. Dishonored check. A dishonored check really represents